All right. Let me show you a few things you need to look out for before you enter a trade. Few but important things you need to look out for before entering a trade and how to enter a trade. Although there are lots of things to talk about, but then I'll just show you very few, but very important that you should always look out for you to enter a trade. Now, there's what is called um top to down analysis. Okay, what it means is that the first thing you need to do is to look at the market structure and the market structure using the time frame. You must use from 1 week down to 5 minutes, observing the market, what the market is doing, and analyzing your market using all other tools, trend line, and the rest of them, price action, and the rest. Okay, so now what do? You take your 1 week, you go to your 1 week first. You must always use the highest time frame, then keep coming down. What it does is that it starts to give you clarity into what the market is doing. Now, looking at this market, you can see that the market is buying. Not only that, when you look at it, you will see that there is something like a cross sign, which is the last lower low, which made the last lower low. That cross sign is what is called doji. Okay, and it's a sign that the market will buy because it's showing weakness in the selling capacity of the market. So I will be sending to you, I think I sent it to you before. You can check your notes. I was sending you chart patterns. It's under chart patterns. You see some of these things and understand how they behave. So from this 1 week, I can see that this market is buying, confirmed. Then I go to 1 day. 1 day is also showing me that this market is gonna buy, and I'm seeing, and then also I'm seeing head and shoulder, which is a reverse pattern that shows that a particular market is about to reverse for another direction, which is now buying. It has been selling for a while, and now because of head and shoulder, which is a sign of reversal movement, that this market is going to continue to buy. You get the point, or start buying. So that is the process the market is in now, to buy. Okay, and this market will buy for a long time. I'm sure. All right. So having done my 1 day analysis, I'm seeing that this market will do what? Buy. Now, all these time frames now from 1 week, 1 day, 4 hours, and the rest of them is giving me clarity into what the market looks like. Okay. Now I'm still seeing a buy for all these time frames. All the time frames is showing me what? Buys. Okay. Now I will also draw my trend lines, also use other confluences, find out what the market is looking like, use other confluences to confirm that this market is going to buy, and then you do a setup. You draw a setup. Okay, if this market crosses this particular demand, for instance, let me show you what I mean. You draw stuff like this. If you look at this now, this is a demand zone. This is a demand zone. So if this market for any reason breaks this point and then probably retest it, and then probably will now give you a certain chart pattern, probably with a doji or something, then you know that okay, it's good for me to enter. But then all these time frames will show you what the market looks like and where the market is going. But if you want to do your entry, you use what? 5 minutes or 15 minutes. And then in a market like this, for instance, if you want to enter this kind of market using 5 minutes, you bring your SL somewhere here. You don't just keep it here. You give the market a breathing space. You bring it somewhere here. So for whatever reason, this market breaks this guy here, then that means it may reach somewhere here, and you may not want to hold such a market. So keep it here. When it breaks here, you know that wait for it. It may reach somewhere here. You get? So that is the major important thing you need to do whenever you want to enter a trade. Use the highest time frame, analyze the market very well, look at it closely, look out for different confluences, and then by the time you are satisfied where the market is going, always follow the market structure. where the market is going. Don't trade against it. It's usually risky. Okay. So that being said, these are the things you do for you to trade. Now, how do you put your SL? SL is very important. In fact, SL is more important than your TP. This is something I always say. Your SL is more important than your TP. Now, wherever you put your TP, you are correct. But the problem is that because you don't put your SL where it's supposed to be, and probably because you don't have enough equity, your market will always come and take you out and continue to go your way and probably hit your TP later. What do I mean by saying that? Your TP, wherever you put it, you are correct. Because no matter what happens, market will always go there. It may take 1 hour to reach your TP. It may take 1 month to reach your TP. It may even take 2 years to reach your TP. Maybe take 10 years, but definitely it will get to that TP. Definitely, it must. But the question now is, where did you place your SL that the market is going to obey it? So how do you put your SL? You must always put your SL at a demand or supply zone. Or you can always put your SL at a resistance zone or a supply zone, support or resistance zones. So either you say put it at a resistance, support or demand or supply zone, or you put it at your resistance and or support zone. So wherever you see the highest lower low, or where the market makes a higher high and drops, that is your, if it's a higher high, then is showing you that this is your resistance zone. If it's a lower low, the last lower low before it reverses, then that is showing you your support. So with that understanding, your SL must be on a good support system, support zone, or a resistance zone, especially where there are multiple resistance or multiple supports, which makes up a demand or supply zone. Is this clear? So these are the things you look out for before you enter a trade. And I will say this now. No matter the account you are doing, see Forex as a business. Don't see it as a quick money making scheme, or see it as numbers. No. Now you can set up a plan, a trading plan, that you make $5 every day. That's your target. $5 every day. Okay. And then for that $5 every day, which is your target, you can make it in one trade or in two trades. Okay. Immediately you make your $5, get out of the market. If you're able to do that for 30 days, you're going to be having $150. It's a lot of money now. Naira is almost dollar is almost 1,400 and something currently. You get the point? So see it as a business. Be consistent with it and don't be greedy. It's not like someone going to the market to go and buy, to sell pepper. You continue consecutively, you sell at the same price. Use smallest lot sizes to enter your trade. Let your daily profit be $5 and let your daily loss limit be $3. Now, if you're able to keep to these things, if you enter a trade, each trade you enter, you must not lose more than $1. So what that means is that you should enter a trade where your SL will be minimal. If the market have left you and it has gone far and you can't see a good market structure or demand zone or supply zone or resistance and support zone where you can put that your SL in that market before you join it, that will give you a smaller loss, don't enter that trade. If the resistance where you want to put your TP or the support where you want to put your TP is not a major support or resistance before you join the trade, don't enter that trade. Like I said, your SL is key, is more important than your TP. All right. So you are only allowed to enter a maximum of 3 trades in a day. All right. So these 3 trades in a day is until if you lose $3. So for each trade you are risking $1. For each trade you are risking $1 for each trade. So in 3 places, if you had losses for the 3 trades you did for that day, that means you're going to have $3. And so that means you have reached your loss limit for the day. You wait till tomorrow. And while you're waiting till tomorrow, you go and study and find out why your analysis did not work. That is how to learn more. You go on YouTube, you ask me questions if there is need be, if need be. Okay. Now the next thing is, the next day you're going to trade. If you make $5, you've already made almost the losses you had the other day. Do you get the point? So you hold on again for the next day to enter the market, and always try not to stay too long in the market. Very important, because market these days are becoming very manipulative and choppy, so to say. Okay, so and then most especially, most of the SL now, the brokers always want to take you out, want to shake you off, and the rest of them. So these are the few things you need to observe, and you're going to have a wonderful trading experience. Don't forget that Forex is not a fast money making scheme, it's like a business. You grow it with time. You see, so if you're able to make $5 consecutively for the next 30 days, you'll be having $150 at the end of the day. But even if you're able to make $50 in a month, you are still on point, because by the time you calculate, it's almost 100K. You see, so be active, don't be greedy, and understand what the market is saying. Before you into the market anyhow because you think you want to make some money. I hope this is clear what I said.